Cool. Welcome everybody to today's charting session. Definitely excited to touch on a few things here, but before we even jump into the charts, I wanted to cover what we posted in the group, the Discord chat a few minutes ago, as far as how to digest or potentially how the market as a whole might digest a lot of this information that came out at the end or after closing on Friday, right? Being that SPY closed about 2.5% or so. On the week, it was a total increase of about a little bit over $12 that we saw. But after market closing, what happened? If you take a look at some of the conversation within the group, we found out that Moody's, one of the credit agencies, finally issued somewhat of an expected credit downgrade for the US. So this definitely caused some slight concern. It did see us after hours lose all of the gains completely that we had made on Friday, and it left us right about halfway or at the 4 hour mark from Thursday trading sessions. And looking at futures open, we are within the first 15 minutes, or the first 15-minute candle is about to close here. We did tap 59.20 on ES and it bounced, but it looks like we might be closing here with some sort of doji candle, whether that has us go to the downside or it's a reversal pattern here. That'll be to watch, and it'll be something that we eye into market open tomorrow. So definitely excited to see what this entails. But to give you all some sort of background or like the historical or timeline of what has led us to Friday after market, the US previously had only had two credit rating downgrades by these major agencies before Friday, right? So each time, what we've seen is that it sent some sort of ripple through the markets. If you take a look at the breakdown, this could potentially go all the way back to 2011 when you get the first official downgrade from the S&P about what was this now, 14 years ago. Credit rating change from that AAA down to the AA plus, or I don't know exactly how you state that, but a big reasoning behind why that initial downgrade occurred in 2011 was the political gridlock around, or the conversation hesitation around the debt ceiling, right? There was no long-term deficit plan established. And overall, what this did is it weakened confidence in US fiscal governance. So when you take a look at everything that we've talked about or that we've covered within our lecture so far, it's been a large focus on macroeconomics, right? How do certain governance policies and the way that both the Fed and the government go about addressing certain things, how does that play an overall role in the market, and where we find our foundation or our footing, and how does that sway market sentiment in one direction or the other? So that's definitely a big part of and very timely in regards to the conversation that we've been having in the past 6 or so weeks now. So the major impact around this is back in 2011, we had a sell-off, right? When this initial credit change or downgrade happened. Ironically, though, when you take a look at that point in time, we saw bond yields fall, which remember, if you take a look at I forget, this was either session 2 or 3, when you take a look at that conversation revolving around treasuries and bonds and things along those lines, this typically signifies a flight to safety. Right. So then fast forward about 12 years, the second agency, Fitch, had its downgrade again, going from that AAA credit score rating down to that AA. This was due again to repeated debt ceiling standoffs, right? We kept having that hesitation or that conflict beyond, are we going to raise the debt ceiling? What does this look like? Why are we continually occurring debt? Instead of addressing it and pushing it down, right? Or attempting to do the reasonable thing and cut as much spending as possible when we needed to. And what does that look like when you are a global power? And what were the reasons behind continuing to spend and wanting to hold that type of position, right? These are all things that we should think about and that have a role in why we saw what we saw from 2011 to 2023 and now current day. So the biggest reasoning is growing debt, right? And the overall burden behind the interest rates of that debt that is owed by the country. So overall market volatility has surged, and it was a renewed spotlight in regards to, is the US's um, fiscal responsibility? Has it been taken on in a responsible way, or what is the credibility behind the way that this government has managed those fiscal responsibilities? So now looking back at May 16th, 2025, the third agency, Moody's, has officially issued that credit downgrade again, down from that AAA credit score rating. And interestingly enough, though, back in November 2023, about what is this, about 3 or so months from Fitch in issuing their downgrade, Moody's had issued a warning, right? Or saying, hey, this is what we're seeing happening right now, and it could be a potential issue down the road. It's now turned into that potential issue. And again, this is due to the same debt concerns and the same political risk that the government has taken with the way that it's managed fiscal policy, right? So take a look back at the previous lectures when we talked about fiscal policy specifically, and what does the government have a holdover, what does the Fed have a holdover, and how do those intertwine or play a role off each other. That's definitely something that is important to understand all of these things that are currently playing out, right? And we just got that notification after market hours. So how is it going to look like moving forward into this new quarter, into midway through the trading year, right? And on, and just taking a look at again, this second candle here in openings of future, we are looking to bounce. So we'll see if that does bounce and eases concern going into market session open tomorrow. We'll go ahead and see how that plays out. But overall, why does this matter, or why am I starting today's session with this sort of conversation rather than just diving into the charts? It's the fact that overall a lower credit rating could potentially increase the borrowing cost over time. It does signal rising concern about US debt sustainability, right? Do we have the ability to repay all of those debts? And despite the downgrades, what we've seen is that US treasuries still remain across the globe the what could be seen as the top safe haven asset, right? If you take a look at the Discord, I did link a breakdown of foreign US Treasury holders. So this is definitely something to keep in mind or to watch as far as who still has a stake within the US market and our government as a whole. So a big lesson to take away from this, whether you're actively trading the markets or you consider yourself as a long-term investor, you need to watch how markets react, not specifically just to the downgrade itself, but to the underlying costs, right? Again, I emphasize, or I stress these conversations that we've had over the past 6 weeks when it comes down to the macroeconomics side of things. So how does this political dysfunction can have how can it have an impact in the macro economic side of things is something that you want to keep in mind ongoing as we move forward. So now to dive into our watch list for the week. As you know, we cover our top three indices week to week. They don't change. SPY, QQQ, IWM, SPY because it gives us an outlook at the overall market, so a wider breadth of it. QQQ, tech, right? We want to see how the biggest players within the market are moving specifically. So it's a little bit more refined than SPY, but it's still holding a lot of the same stuff. But then we take a look at IWM or the Russell 2000, which is the um, which is the indice or the ETF that covers small caps, right? So this kind of gives us a general between three, a general outlook at the entire market. Beyond this, we typically add on three individual stocks that we're either looking into options contracts for or potentially as long-term investments. And the three main ones that I am going to include today VSCO, Victoria's Secret, INTC Intel, and in addition to that, RBLX, so Roblox. These are all more on the aim for long-term additions. They are all three that I've held in my long-term in the past throughout 23, 24. Very fortunate enough that I got to sell off those positions at the high around early 2025 before we saw this current retracement or the past retracement that we were going through, but definitely an opportunity to re-enter some of these positions. Some of these positions are low enough that they are enticing again to me. Some of them I missed my entry, like Roblox, right? And we'll dive into that when we get to that chart specifically. But in addition to this, we will also cover QCOM, Qualcomm, one of the charts requested by some of the individuals in the group. So definitely encourage you to engage and to reach out and ask or let us know. These are the ones that I'm interested in or that I'm looking at specifically, and we can definitely work through those and at least provide my own understanding and others within the group and bounce ideas off each other because that's exactly what we're here to do. Without further ado, let's go ahead and look into SPY right here. You do see my blank chart, right? And I will always love to start with just looking at the naked chart itself before I provide you with all of the tagged up version or all of the levels that I've already identified for myself, just to give you a general idea of what are the main areas that I'm looking at. At this point in time, everybody's looking at all-time highs here, right? Around 611 39. And with throughout the week, if you take a look at the chat that we've had in the group, I repeatedly brought this up and I never really answered the question, although I said I would, because I really was hoping that somebody would start to throw some ideas out there. But I mentioned, I think around like either not this past Thursday, but the Thursday before that, or around Monday, May 12th, I said it feels like the market is approaching levels of stress, or maybe not stress, more like anxiety or like a feeling of uncertainty. And it was interesting that we brought up that conversation because then we started to get people saying things like, man, I feel like I need to go full port or full position into something right now, or individuals letting me know, hey, these are the things that I have bought into, but I wish I would have bought more. Or what are the next opportunities? Do you see something coming up, right? Because what have we been blessed enough to have taken advantage of over the past few weeks now, really since the end of April, pretty significant pops, right? And it's been fairly, I don't want to say easy, but it's been fairly, there's opportunity, there's readable or opportunity has been readily available throughout the market as far as you could see this consistent move, right? Even if you take a look at the past 1, 2, 3, 4 weeks that they've been green. So in essence, if you started the week with a call options contract and held it all throughout the week, every single past week, you've ended green. So definitely a great opportunity, right? And that's why we've been able to come out with a significant positioning now within the long term, and why we're not now looking to move those gains over into the long term, right? Because that's the whole goal here. It's not to full port options positions or to go into futures, right? And just try to make a living off of this. The way that you will end up building wealth for yourself is to make sure that you are majority or the majority of the savings or the gains that you get from this, that they're going into the long term, right? So that's something that I'm going to emphasize day in and day out. Um, so given that whole spiel, right, it feels like everybody's kind of having or building this sense of FOMO, or like the am I missing out? And I think a lot of this has to do with the under positioning, right? If you take a look at the amount of individual, whether it's individual investors, the funds themselves, so the institutional investors across the market, there's a sense, or by the numbers, there's under positioning, right? When you take a look at the amount of shares being held, the amount of people in the market a year ago or even a few months ago, it was a lot more. And a lot of people did something very similar to what I did, where we sold off a few months ago, right at the beginning of the year, waiting to see how this climate was going to play out and whether we were going to get a significant retracement, which we kind of did, but now we're right back up, right? And the key thing that I touched on is take a look at where we're at right now, right? So where is this? Well, what was significant about November of this past year? We're right back literally at the levels that we jumped up to, right? What we created new all-time highs back during the presidential election. So really we had this consolidation and pretty significant retracement, right? We retraced everything that we had gained through about April of last year. And I think that brought major concern, but we're right back up at those all-time high levels. And that's why you're getting this feeling of uncertainty or this anxiety of like, man, I should have added more, or I should have been in the market already. So when you take a look at right all-time high range, it's this, right? The top here that you had all-time high, and before that breakout during presidential election, this is all-time high. So anything between these ranges, it's going to bring that sense of uncertainty or like FOMO, right? And that it's not surprising why we gapped up, right? You do have to keep in mind that we have this gap here that's outlined in our overall breakdown, and we'll talk about it. But that's something that I'm definitely keeping an eye on, especially in regards to how this next week plays out, the potential to fill that gap, right? Because at one point in time, all of those gaps get filled. But I definitely wanted to explain a little bit about that all-time high range and why you're getting certain comments going on or certain feelings, right? But beyond this, essentially, you're looking at, right, if you want to divide this up into additional ranges, that's a previous top, that's a previous top, and then you get this right here, right? So remember that you're going to feel overwhelmed when you see my next chart as far as how refined or how far I've gone into identifying my levels, but I've done that for myself because I trade SPY and ES, or the way that I treat it is as a day trader would, right? Because I'm looking at these refined levels, and the way that I trade that chart specifically, it's meant to give me my weekly and my 4 hour levels, and I react or I execute based off of how price action is reacting to those levels, right? So it's really refined moves. I'm not really swinging them as much, but when I do, like you've seen with all of the SPY contracts and IWM, it's been when I've gotten a certain push with those weekly levels, and that's why we've gotten a pretty significant amount of gains, is because it's been off of those higher time frames, so higher confirmation levels. So let's go ahead and erase these initial annotations, looking at the blank or naked chart there. And I'll go ahead and now give you a little breakdown of what I'm looking at specifically, right? So now here you go. Here's the entire breakdown of it. And I know it looks super confusing because it went into lower levels, but taking a look at the 4 hour time frame, the big thing that we're eyeing here as far as whether we hold or not, one is again the fact that we touched on this earlier. After hours news with the downgrade, it wiped the entire gains and halfway of what we had gained on Thursday session. So that's going to be pretty significant as far as whether we hold or not, and how does momentum lead us into that potential gap down from around what was this, 577 to around 567-ish. You can call that 568. None of this is on the dot, right? On the set, it's just within a certain degree of it. So that's a gap to definitely keep in mind. But overall, it was a good week, right? About a little bit over 2%, which is around 12 or so dollars, almost $13 up on the week. So the key levels that I am eyeing, if I'm looking at a potential day trade, right? Keeping in mind the purple levels for me are my weekly levels identified on the weekly chart. The green or turquoise levels and rectangles or zones here, those are based off of my 4 hour time frame. So those are really those are what I'm trading, weekly and 4 hour. Longer discussion as far as why not the daily or monthly, things along these lines, but we go into those discussions within the group itself. So I invite you to check it out too. As far as support, right? Keeping in mind that we saw this sort of retracement after hours, and where futures are currently holding, my initial level of support will be 588, then which is here, right? So that's, if you take a look at 588, that's essentially the midway point of the range or the weekly candle established these past 5 days. So that's the midway point. If we're looking below that, I then have my weekly here, right, at 584.20. Under that, you can start taking a look at some psychological levels as well, or whole numbers like your 580, 570, 575.28. Those are the main ones that I'm looking at as far as support, because like I stated earlier, at 577, it's again a psychological level, because you're now looking at the gap fill. And that's what everyone's going to be aiming for, is the gap fill itself. If we do breach 577, overall, when you take a look at why was last week's push or gap up and the sustainment of it, it happened because over the past month, since really like April 24th or the end of April, that last week, the S&P has climbed above its 100-day moving average, right? This was a technical threshold. If you're looking at overall momentum and you see those averages stack up on each other, it's indicating a strong market momentum. And this kind of renewed investor confidence. I think that this movement marked a major buying signal. Especially when you align that with what was going on as far as tariffs and hinting about agreements and deals being made, potential pauses, things along these lines. It created an environment where you felt a lot more confidence, right? Overall, again, SPY is now hovering around levels that have touched or what we initially established during the presidential election. And this is pretty significant because of the underpositioning of the market. A lot of investors and funds have not bought back into the size that they were previously holding. So you're going to get that uncertainty all throughout these levels. But more importantly, and this is something that I'll show you within QQQ as well, is if you take a look at, let's go ahead and bring this naked chart on the 4 hour time frame. If you take a look at where we're currently hovering and the the trend, right, that's being traded, take a look back all the way between and I mean it goes further back, right? But if you essentially take a look at this whole range from like November to let's say here February, right? So November 2024 to about February or even early March this is 2025. Yep, look at what was established here, right? When, oh, I did not mean to do that. I want to annotate here for us. When we take a look at something like this, right? And this is, I'm just showing a range for you all. Bringing this across the board here, bringing this across the board here, right? And this isn't perfect. And I love doing the annotation because just a reminder to you all that as you're establishing your levels, it's not going to be perfect. It's not going to be on the set. But essentially, we want to see the trading pattern that's been established, right? What would we call this? This is the neckline. This is the neckline of this movement here, right? As far as this show, what does this show us here? What does the neckline typically show? It's price consolidation. So within this whole range of months, price consolidated, right? And then we got the dip, raise, rejection, failed to break, raise, consolidation, and then we popped right into the neckline. And I bring this up because you're not always going to get like that head and shoulders or the inverse head and shoulders, but that's what we could be seeing here. It is now a rejection to then fill that gap there, consolidation, and then a break back above. Because what needs to happen, right? When you again, when you remember overall market movements and how or what moves the market, it all has to do with the understanding of fair price valuation, right? So we need to establish a lot of people buying shares here or buying shares here to justify or to make the market feel like, hey, I'm holding here, it's a fair value. We see momentum. We see the possibility to keep going up. So that's what I'm seeing right now is we've gapped into the neckline of this previous consolidation, and we just need to determine whether it's a fair value. And once that's determined, we're either going to push back down or we're going to break that and try to test that all-time high range, right? That we've seen to the upside, which is what we talked about over here. So moving on, let's go ahead and break down Qs. Have this whole chart already broke it down as well, but it's the same thing, right? Being that tech essentially mirrors the S&P 500 as far as the biggest holdings or what makes up the large percentage of it. Same thing, we got that upper or the all-time high range up here. What I want to focus on is this area here, right? So when you take a look at this gold or yellow highlighted area that I have here, that is the gap that we have to fill. So that's what I'm eyeing very closely this coming week. That's going to be the psychological thing. As far as do we or are we going to drive this down and fill that gap, or are we simply going to bounce off of these previously established levels, right? Because we are hovering at around a weekly with a few strong 4 hour levels under that. So when you take a look at what I'm actually aiming for, or what is one of what are my support and resistance levels, right? To the downside, it's 515 essentially. My initial one, depending on where we open with futures right now. We're then looking at around 511, 509, or I have 508, 82 if you want to be exact. Psychological level at 505, and then under 501.50 is when we start targeting that gap fill. And odds are, if we dip into it, we're going to fill that gap, or at least touch within this zone here, which would be right around 594.80 or 595. I wouldn't be surprised if we touch that. That being said, to the upside, it's very limited, right? And you get a lot of hesitation here because of all of the resistance or the minimal exposure, the minimal amount of consolidation that we've established at these all-time high levels. So you're looking at levels like 518.78, essentially 519, 523.31. I then you have a significant gap, right? Or the reason that I have this is because of how it's traded within that area, because that is all-time high levels, 531.35. Then you're aiming for this supply zone. It's where it rejected at all-time high between 537.28 to 539.43. Now taking a look at or moving on to IWM, same thing. I'm not necessarily concerned about moving into all-time high levels there. The main thing I'm looking at is the gap. And I say this because take a look at how IWM traded this past week in comparison to Hughes and SPY and what was happening. Why did we get some sort of retracement initially, right? Because for most days, what was happening in the mornings, you would get a pullback, and then you would bounce into the end of the day. And a lot of that had to do with rotation into staples and the fact that IWM technically stayed within the range of Monday, right? It slightly broke at the end of the day Friday, but all week it traded within the same daily candle of Monday. So what is this telling us is essentially IWM is the one leading us to the downside. So it could be that it's been the weakest. So it could be that IWM is the first to retrace or to pull back and fill the gap. And that's what could trigger, or it could be like our way to anticipate a potential retracement in Qs and SPY itself. So those are the main things that I'm looking for. I'm either eyeing a break above last week's high, which was right around here, right around 210. We can call it 210, that psychological level, or a dip below 206 to potentially trigger that fill to the gap side. Those are the two main things that I'm looking at in IWM. And now we can go ahead and start diving a little bit more into the potential long-term opportunities. One of the ones that I am eyeing very closely is VSCO. And if you take a look at, or if you notice, within the next few names, or at least VSCO and RBLX, Roblox, One of the main things or reasons why I've been tracking these closely is that they are newer players, right? They've been in the market less than a decade. IW or not IWM, VSCO, they officially IPO'd back in 2021. So I highlight this, right? If we want to take a look at this candle specifically, what does that tell us? That is the movement right here, this candle, that was IPO price, right? That's the range that it established within the first week of trading on the market. So for me, what this has done, it split the current chart into the two main ranges. From this zone up to the all-time high of 76, that's the higher range. From that zone and below all the way down to 1362, that's the lowest it's ever been in its history. That's the lower range, right? Very fortunate that we got to take advantage of this a few months back where we caught some of this lower range here, right? You can see the downtrend that we were following and then the establishment here, and we got to take advantage of a bounce here. Didn't sell at the full bounce there, but testing or retesting that previous or the IPO price is where a lot of those profits were taken, right? And then we saw that significant retracement, and now we're seeing a hold. And the reason why I'm really interested in this, and I brought this up before, it's the bounce, right? The how it's held here. This tells us that every time market has reached these zones, these levels, we've deemed it to be of fair value. So yeah, kind of missed the opportunity when it retested these all-time lows there, right? And now it's about $10 above that. But taking a look at the overall trend, there's still enough movement up to the neckline, right? Or what's splitting the midway point between all-time high and all-time lows here, pretty significant amount of room. And even beyond that, once we establish a break and hold above this, it's going to bring a lot more interest. It's going to be followed by lot more attention as far as the products that they're putting out there, how their company is being managed, things along these lines, right? That play a role into the overall valuation of the company. And that's something that we'll dive into this coming week. And that's why I'm also watching this, because I want to talk about its valuation as a case study for the following lecture or week that we're going to cover. So that's definitely something that I'm eyeing, is the fact that it's holding above the 2050 mark. And that to me, it's a trigger point to purchase, right? For the long term, knowing that this is something that's going to stay there at least a decade, right? So definitely something big to watch moving forward will be this name specifically. Now we go ahead and move into our BLX or Roblox, very similar. Taking a look at those movements. Again, this golden zone or yellow rectangle that you see here, this was the sweet spot or the core of price action within the first week that it IPO'd. Again, back in 2021, this specific name has been in the market for under a decade. So another opportunity to find one that's establishing itself within the market. For me, it was, and it's now kind of a missed opportunity, but excited to see if it holds above these levels, and also, aim for a long-term investment, because it to me is a missed opportunity because I didn't catch it at these lows, right? But very similar to VSCO is 1, 2, 3, 4, 5 bounces, right? And now, I mean, you can even count this 6, 7 um, within the lower range. So it was really strongly established here. Very fortunate that we got to take advantage of the bounce right around these levels. I actually think it was within this 4 hour zone here. And we got to sell off again, not at the high here, but right as it was testing in um, those initial IPO prices. And then we sold off before the rejection. But really bummed out that we missed that bounce, and I kind of lost track of it, or I didn't keep it at the front of my mind the last few weeks until about a week or so ago, and I noticed where it was here. So it is a great opportunity now that we're seeing some momentum hold above these initial IPO prices. And again, it's going to be one of those case studies that we dive into as we talk more about valuation and why there's potential for this to be a long-term investment. For me, the buy-in spot or the sweet spot would have been the $50 mark. Here right now, we're about 30 or so dollars above that, but also knowing that there's plenty of room to the upside where we've seen price test right at around 140.60. That's an all-time high. So a little bit less than double, but you want consolidation at these levels. Ideally, I would love for another dip into those initial IPO prices to make that purchase, but lots of opportunity here. Let's go ahead and clean this up, and we'll move forward now into our third name, which is Intel. Intel, I left it blank with the purpose of charting this alongside you all, being that it is going to be one of my additional investments. So taking a look at Intel itself, we want to break this chart down, right? We got the all-time high here. And before I even mark this, actually, let's do the top to bottom, right? So we'll mark the high there from 2021, right around 67 or 67, 62.70 there. Right. And if we want to be exact, we can always do this here, 62.70 to mark that exact level there. And then what I want to take a look at are where have we seen those changes in direction? So I am eyeing specifically this top here, right? That was a top there. That was a top there. That was a top there. And then kind of, you can already see, right? Eyeballing it, those pretty much align with one another. So when we run that level, it's going to touch all those areas. So being that those were tops, what were the floors, right? Floor here, floor here, floor there, floor there, floor, top there, floor for this upper range. You can see it was a top there, right? Okay. So you can see those pretty much all align with one another and so on, right? And see the floor there, floor there, floor there, top there, top there. Well, what happens there? Right? We're just all we're doing as we're going top down is we're identifying those places where there was a change in direction, where price was running, it topped off and then retraced. And not on its retracement, where did it land or where did it find footing? Where did it find a foundation? That's literally keeping it simple, not overthinking things at its base, at its core. Now that's exactly what we're looking at, or at least myself, the way that I like to chart, the way that I like to plan things out for myself. So that being said, let's go ahead and mark those that we talked about, right? And these are all purple again because we're charting on my weekly chart here. So that's just a way for me to kind of have like a quick reference as these levels are playing out as far as how strong are these and what time frame did they establish themselves on. So bringing it down here, we called this general area right here, top right. I mean, these are levels back to 2016, right? If you all remember that conversation we had about Intel and why I'm interested in it, take a look at where we're at, right? And I want to, and I don't feel the need to chart this like into the depths of it, right? All we want to do is provide ourselves a few downside levels, a few upside levels to keep track of where it could potentially be going, where it's been, what areas are of concern, how long should I hold, when should I start thinking of it as a loss, right? Things along these lines. Sweet. So I feel fairly comfortable with this. I'm just gonna mark up one more level here. And you can see, right, my candles are super zoomed out. And I say this because, again, nothing's going to be on the dot or perfect, but I also have this magnet feature. So it calculates like the ranges and the amount of candles it's touching and things like that. So it helps me kind of pinpoint some of those levels as well. Oh, let me bring that back. Sweet. I mean, I can mark those levels too, but we won't right now because we don't find ourselves at those. Sweet. That's right. So those are some of the weekly levels that I've now given myself. We initially got into this one, was it? It was, I want to say, yep, it was around here. When we had that big drop. This was when they were undergoing like a shift in their CEO and trying to figure things out. So that's definitely it's still within the area of interest. And I say this because again, what have we done here, right? We've held once, twice. We're holding these levels, right? So you're still within a good buying opportunity, but also understanding that it's beaten down, right? And it's been beaten down for a few years now. Like we touched on earlier, these prices that it's touching on, these are initially, right, touched in 2012. 24. So between 2012 and really like 2016 is when this consolidation or these ranges were established. So that's what we're hovering around with the potential to dive or to fall, bleed into early 2010 levels. So that's what where the concern is, but also that's what gives us the understanding that it has a lot of potential, especially within the semi conductor field or sector industry, however you want to see it or call it, because it's American made, right? So when you think about what its purpose or where has it seen its expertise, what made it once back in the day a leader within the field, it was its production side of things. So really strong emphasis in being able to produce things at a very quick pace to have their equipment, their PCs, their processors out in the market in loads, right, in substantial amounts. So really having to go back to that, I think, is going to be a big thing, especially if the government's willing to subsidize or give contracts to semiconductors or incentives to increase production within the state specifically. So right now, I think that for me, this really was the initial potential buy trigger. As long as it holds within the 20 or so dollar mark, I would love that opportunity. And if you're thinking about, well, what targets should I aim for? Take a look at this consolidation here, right? Oh, that's the initial target and resistance that you're seeing here, right? It's came up, rejected, came up, rejected, came up, rejected, and might come up and reject again, or it's going to break and then hold, right? So if you're looking for just a short term, it might just be a push up to around like the 25, $27 mark. So even then, it's a good opportunity, especially if you're looking at options contracts or at least further dated ones within the next like 2 or so months into the end of this quarter. It could be a potential move. But beyond this, what you're eyeing is a break into these higher ranges, right? So if we're now eyeing a break there, and again, these are all rough estimates, so This is what we're looking for. This floor here, boop, 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 boop. So within the within the 37 to $40 mark is the ideal initial potential like profit take if you're doing this for short term. That's what you're aiming for, and then you just see those additional roofs to the upside, right? So this is another area you're aiming for where it rejected there, rejected, held, rejected, rejected, tried to hold there, then rejected, rejected, right? Rejected there. This is what we're aiming for before you then start to aim for those previous all-time highs up here, if I'm not mistaken. So definitely one to keep an eye on. I think that these are perfect trigger levels to purchase depending on where the market goes and how we feel as far as the market itself being stable. So good opportunity to keep in mind. If we do end up buying within this 20 or so dollar mark, and we think this is going to hit and break, create new all-time highs, there's a potential to like triple your investment, right? Not to say that that's going to happen, but if you're thinking about something that you could potentially be willing to hold over the next decade or so, it brings great opportunity. And that is the bulk of what I wanted to touch on today. One more that I'll break down here, not as in depth because you'll get the full in-depth breakdown within the Discord itself. This is where you see the exact levels that I'm breaking down beyond the main ones that I've touched on today in my specific thought process. But I wanted to touch on QCOM because this is one that was brought up within the group itself. And there's been a lot of questions revolving around the lines of, well, how do I know whether a weekly, whether a 4 hour, whether a daily, whether a monthly level is valid? And then what happens when I'm charting at the monthly, at the weekly, and then I dive into the daily and the 4 hour, but the levels are overlapping? Right, there's going to be overlap. That's the whole point of these levels, is that price has already touched these levels. So whether you mark them on the monthly or the weekly, when you go down to the daily and the 4 hour chart, you're going to see those levels being hit, right? Because that's what price action did, and that's what made us market. So the way that you want to digest this or understand it is that the higher time frames are going to be stronger levels as far as the moves that you see from them. They're going to be bigger moves, right? Whether it's a monthly, a weekly, whatever it might be. So the goal isn't to chart them on the monthly and the weekly and then tag them up again on the daily, and then on the 4 hour, you're going to make your chart a mess, right? So essentially, the way that I approach this, or that I perceive it, is when you're looking, and this is why I only go weekly time frame and then 4 hour and then trade off of the 15 and the 5. Because what I'm doing on the weekly, I'm breaking this up into ranges. If I haven't emphasized that enough, I want to emphasize it. All I'm doing with the chart on the weekly is I'm breaking it down into my stronger ranges, right? So if we take a look at this price from, and it's not all time high, but about 215 to about 176.75, this is the all-time high range, right? We see that here back in 21, 20, late 21, 22, we rejected there, right? And came back down, consolidated, came back up before it broke, and then now rejected here. So I know that this is the higher time frame, or the all-time high time range. All-time high range is what I'm trying to say. So what is price doing right now? You see the consolidation here, consolidation, consolidation, and now we're right below it, right? We jumped or gapped up there last week, but rejected or failed to hold in this consolidation. So all price is doing right now is consolidating, and we're going to have to determine this next week, whether it comes up and holds in this range or it drops down into the lower range, right? Because now from this high range, we see this consolidation, right? This is a range itself. And then when you take a look at the range below that, what is it? Let me go ahead and annotate this and break down why I have certain levels. And then just note these, whether they're the yellow, the purple, the orange, these are all weekly levels. But I colored coded them to kind of give you an idea or to point out like the ranges that I'm looking at. So here, right, rejected there, and then the base there. So that's the range. That was the move. It tried to hold, right? And then again, bounces, fails there, bounces. Yeah, it breaks below, but look how price is held there. Consolidation, we get consolidation there, right? And then we dipped here and then just snap back up. So this itself is a whole range. And the purple one here, what it's telling me, it's just the midpoint. That's all it is. It's the midway point uh, behind this move here where we pumped, rejected, found base, and so on, like we touched on, right? So that's the point of that there. And then below this, right, we get this lower area where we had initially tested and rejected back in 2020, right? And then what happened? This right here, that's the COVID drop before we came back up, created all-time highs, and so on. So this right here from the hold here and the break up, that gave me this range, right? We came back to the midway point, held it, held it, held it. We haven't dropped back below the midway point really at all since that was established back in 2020. So the midway point here at around 96, that's really important to me because we need to hold that if we get additional retracement. And the red line here, all it's telling me is that these were pre-COVID highs. And if we dip below that, just market wide, we're probably in some trouble. So that's a breakdown of my thought process behind charting it, right? And then when you go into the 4 hour time frame, you've established those ranges. So now your goal isn't necessarily to when I mentioned in the group or have previously mentioned, like now my duty here, like my goal here, I think I said something like it's to being that there's going to be overlap, it's to identify the ranges, right? And not necessarily where price has gapped or anything like that, but now that we've found those ranges on the higher time frame where where has price seen those rejections, those bounces, right? And I mean we can see it very clearly here. So all we're doing is refining the levels within the ranges that we established. So if I take a look at something like this here, right, and now I'm going to change it to teal because we're within the 4 hour time frame. We've identified an area of interest there, right? A potential zone of resistance now, because every time price is driven up here, reject, 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 right? So Q comment is perfect to a perfect chart to identify some of these zones. So I was happy that this was brought up. And when I was seeing, I was like, wait, this is like, it lines up perfectly, right? Where you see some initial rejection, not a lot of candle bodies, but then candle bodies building there, building there. Every time it touches there, it has rejected. Yeah, it's popped, but it's not always going to respect it to a T, right? So this to the upside is my initial zone that I'm eyeing. If we do see a market wide pump in the next months into the closure of the quarter, we're aiming at really 175 is probably a psychological level that we're going to aim at. And now if we're refining that range a little bit more, what's the midway point, right? And price tells you that there. You take a look at how price is reacting here, right? Look at that consolidation above, below, above, below, above, below, right? When you can see where price then started to struggle to break into that midway point. So that gives us an opportunity to refine it a little bit more. And it's actually showing us another zone, right? Where price consolidation or changes in direction have happened there. And then we just run it across the board there. So that's another area that's going to be of interest to me moving forward in the next few months. Oop. And even looking at just present day, look at this, right? That bounce there, that hold there before it rejected. That's another area of interest. And look what it does. Look what it lines up to, right? That's all that it traded within this past week. All it did was consolidate here. And that's where it gapped up to. And it looks like we potentially have a gap fill to the downside, right? If we then mark this level here, that's the gap fill. And I'm just going to mark it as gold there to know that that's going to be a gap fill area. And just looking at this, right, without even looking to the left of the chart, now all I'm interested in is seeing like how has price traded within the current trend, right? Because it's been lower highs, lower highs, lower highs. So where have those lower highs or those staircases to the upside been established? I want to go ahead and mark that area there as the initial step. We had some consolidation here, right? Or uncertainty, I guess is what I was trying to say, not necessarily consolidation. But here, whether we wick to the downside or we held there. So that's of interest to me. And this big move, that big move there, we know what that was, right? Tariff pauses, if I'm not mistaken, back at the beginning of April. I know that to me, just eyeballing it, this is the midway point of this range here, right? From here to here, it's about the midway point. Sweet. And if you wanted to add another level, just take a look at where rejected there, rejected there. That was the rejection there. That was the start of that 4-hour candle. These levels held above there. That's where this was being squeezed into before it popped up. So to me, that level's significant. And these are all the levels that I'm trading. That's the in and out of QCOM, right? I hope that kind of gives you a better idea of how I go about my own process and the levels that I invite you to keep in mind. To the upside, if you're like, oh, well, I want a tighter range, I'm not necessarily looking to like hold a week-long contract. What if it does start to push up? Look at this range here, right? This area of consolidation. What was the midway point of this consolidation? That's all you're aiming for. And that's what's going to happen psychologically, right? What the rest of the market is going to aim for. So I would put it right around there, right around 158.61, just to give you another upside in between level within that range. That's exactly what I'm looking at. These are all my supports, all my resistances. I don't feel a need to do more than that. I'm going to see how price reacts to these specific levels. So if you have additional questions, definitely feel free to ask, join up, chat in the group. We're here for you all. I hope you all enjoy the rest of your weekend. That will be it for today.